Hi everyone, and welcome to the webinar. We'll just wait for another couple of seconds to let everybody just come in and then start. I think we can start. Yeah, I can see like everybody is just coming in very quickly. All right. So welcome everybody to another session of Climate Startup Week. This is a very exciting session because every year we get a lot of interest in carbon markets, carbon credits, and going beyond carbon credits to green credits as well. Today we have a very, very interesting panel. But before that, let me just take a moment to introduce Climate Collective first, as well as introduce myself. I'm Zui. I'm going to be the moderator for this panel. I'm a senior partner here at Climate Collective. And I look particularly why this is interesting to me is that I've been an impact assessment consultant before, and I look at developing impact assessment tools and frameworks for early stage startups. And a lot of the startups in our portfolio always are very, very interested in the carbon credits and the carbon markets. So particularly interesting for me to be moderating this here today with all of our panelists who I'll introduce after introducing Climate Collective quickly. So Climate Collective, for those who don't know us, for those who've been attending the Climate Startup Week sessions, one or two that have already begun, would know about us. But other than that, we are a nonprofit and we work particularly in the space of climate tech entrepreneurship support. We have supported 860 plus climate technology startups till date. These range across energy, mobility, waste management, and others, including adaptation and resilience, food, agri-tech, since we were just discussing this before we went live. We've run more than 60 accelerator programs, active since 7 years. We have been active since 2016. We have a major presence in India, but really are across South Asia, UAE, and hope to soon be in the global South completely. Our key focus that we have is startups and technology innovation, but we really take an ecosystem approach to developing climate tech entrepreneurship ecosystem. So we have been supporting also aspiring entrepreneurs to gain more awareness, bridge skills to come into the climate tech entrepreneurship space. We do a lot of work on the funding side as well with our capital platforms for funding into various stages of climate tech startups. And I think we can proudly say that we are the largest early stage climate tech startup accelerator platform in South Asia today. As I said, we have these pillars basically for startup support. Our accelerators and the industry decarbonization platform has been our main pillar through which we support startups through mentoring, training, investor connects, pilot projects, and corporate connects, etc. For all of the startup founders in the audience, we have the Climate Accelerator, which we've just launched, and the applications are open for that. We have run 60 plus accelerator programs before, so very, very experienced in this space. This is a great opportunity to connect to fellow entrepreneurs as well and get the necessary skills and a go-to-market strategy. So if you're a founder, do check out the Climate Accelerator. We'll put the links in the chat as well. We also have, for aspiring entrepreneurs in the audience, we have a climate startup school. So do check that out as well. And we have supported many early stage aspiring entrepreneurs through our programs. We also have funding platforms like I mentioned. I wouldn't get into all of the details, but we have a climate tech investment network, which is a network of angels and VCs wanting to invest into climate tech startups. We also have a Seeders Club platform and Climate Seeds Fund as well. And we have a large community, and Climate Startup Week is one such event that we run, a series of events that we run as a part of our community development. We also have other things that we do as a part of community development. There are also offline networking events that are happening alongside our Climate Startup Week. We also have our climate jobs fairs, for example, that we run periodically. We have our impact tools that I was sharing about before, and impact certificates. So if you're a founder and are looking to assess your impact, also get in touch with us. Let's skip this. Some of our partners that we've worked with, the CDC group, Climate Kick, the European Union's Climate Kick program, Ministry of Environment, FCDO, the UK government, GIZ, New Energy Nexus, to name a few. So we've and UNDP Youth Collab programs, etc. So we've run programs with multiple partners across. And yeah, that is pretty much us. A lot of programs being built over time. This is Climate Collective, and thank you so much for joining the webinar today and being a part of this session. Great. So with that introduction, let me start by setting the context for why we are having this webinar today. Recently, on the 28th of June, the Ministry of Power notified the carbon credit trading scheme with an objective to develop the Indian carbon market. This was done with an objective to decarbonize the Indian economy by pricing greenhouse gas emissions through the trading of the carbon credit certificates. So this scheme has been developed by the Bureau of Energy Efficiency, Ministry of Power, along with Ministry of Environment, Forest and Climate Change. This new scheme will fully enhance the energy transition efforts with an increased scope that will cover potential energy sectors in India. For these sectors, there will be an intensity benchmark and targets developed, which will be aligned with India's emission trajectory as per the climate goals. Right. So the trading of the carbon credits will take place based on the performance against these sectoral trajectories. We are here today to discuss this new development and see how it will impact startups, how it will, what is this policy? So we'll learn more in detail about this policy, and we'll also have perspectives from investors on when it comes to investing in green company, how does an investor view that, etc. So from all of the policy perspective, startup perspective, and investor perspective, we'll just talk about basically the carbon market and the upcoming Indian carbon market. So for this, we have a very good and diverse panel. Let me start by introducing the panel, and then I'll hand it over to the panelists to speak. First, we have Shruti Srivastav. Shruti manages the investments at Avana and has over 10 years of experience across early stage investing, private equity, and development finance. She has also been involved in investments across agricultural technologies, innovative foods, and has worked with startups enhancing access to utilities, healthcare, and retail for low-income consumers. So welcome, Shruti, to this panel. We also have two founders. So I'll start with Anirudh. Anirudh Gupta is a co-founder of Climbs, a climate finance startup, as well as he's also a co-founder of the Sustainability Mafia, a non-profit ecosystem for climate and sustainability solutions in India. I'll let him explain further about Climbs in the panel itself. He did his schooling from the Doon School and then graduated from the University of California, Berkeley. We also have Prabir Mishra, who's a co-founder of Trust O1. He has 20 years of experience in infrastructure, manufacturing, and banking. He has been instrumental in launching an ESG reporting automation tool named Footprint and a sustainable supply chain solution named Trust O1 Chain. Right? Both solutions promote sustainable practices, reduce environmental impact, and ensure fair practices, improving efficiency. And we also have with us to get in the policy perspective as well, Bala Subramaniam Vishwanathan. Bala is an energy analyst at Sustainable Energy for All, SE for All, who works with the UN Energy team. This is an international organization that works in partnership with United Nations and other stakeholders to drive action towards SDG 7, accessible modern energy for all by 2020. Bala previously has been a policy advisor at the International Institute for Sustainable Development, where he worked on various energy policy issues around India's clean energy transition. Most notably, his work involved tracking subsidies, state enterprises, and the coal sector. So as you can see, we really have a very diverse panel. So let me kick off this panel now, and I'll start with you, Bala, since I already gave a context about the new developments in the space. Would you tell us your perspectives and first start with telling us the salient features of the carbon credit trading scheme that has been proposed and the primary policy goals and objectives that the government of India wants to achieve through it in the Indian carbon market? Over to you.
Okay, thank you so much. Thanks everyone for having me here. Just sorry, Joey, how much time do I have? Just to get a sense, like, I mean, I'll keep it brief. I think you're on mute.
Yeah. So every question to be answered in about 3 minutes.
Yeah, okay, that's plenty. It's not like how much. So, I mean, just to give some context to the audience, I'm sure most people are familiar with the concept of like markets, but even for those who are not in the know, there are various mechanisms through which a government can regulate the overall, trying to cut down, reduce carbon emissions. Like, there are various means in which you can do it. One sort of a very simple tool is just taxing it. So when something becomes more expensive, the basic sort of logic is that people consume less of it and sort of periodically price carbon accordingly and then sort of cut it down. But sometimes that is sort of forcing a hand, and that can lead to a lot of sort of inefficient sort of allocation of like who gets to benefit from this and who gets affected. Also in a context like, for example, a developing country like ours, a carbon tax can sometimes be too heavy of an instrument. Just to put a context, like I think the World Bank says that like the fair price for carbon is around $100 per ton. That is a lot when you translate it. And even when India has very high sort of prices on petrol and diesel, when you factor in and sort of do the math, it comes out to be something which is not sustainable for like where we are in the development trajectory. This brings us to the principles of markets. So markets is basically, the idea is that we want to come up with the most efficient way to reduce emissions and sort of keep going from there. And India, just to sort of give a bit of a history, we've had a fair share of sort of experience building out these markets, starting all the way from the performance achieved trade scheme, which is basically a mechanism to encourage energy efficiency in the industries, and the renewable energy sort of renewable energy certificates and the renewable energy sort of certificate trading schemes, RECTS. And so that's where like we've started. And over the same period, like where PAT and RECs were evolving, globally, there were many carbon markets which also came up. And I think perhaps the most prominent example is the European Union's emission trading scheme. But then this is not just restricted to that. It sort of has mushroomed everywhere, and not just in like sort of the developing part of the world. So India is finally entering into the space where we are trying to use a market-based mechanism to cap sort of carbon emissions. And from my understanding of reading the documents, it is still relatively at early phases. It is something that needs to evolve, and there is going to be some consultation. And to put it in context, it took, I think, the European Union somewhere from 2004 till maybe like 15 years or so to reach a sort of a stable market. and to evolve, it takes that amount of time. So creating a market sounds excellent on paper, but it takes some time. Some of the things that they are considering, first of all, is the fact that you have this carbon market, which is being proposed, and it's a voluntary carbon market. It is being phased. There is phase 1, phase 2, and phase 3. They're trying to expand the sectors and then sort of eventually reach the point where you want to put a cap. The start of all of that is a voluntary carbon market where you sort of you can offset your carbon emissions as an individual. If there are any entities who want to sort of, for their own declaration purposes, want to say that our operations are carbon neutral in nature, they can purchase credits and so on. And then a voluntary market develops, and then it goes on from there. I can go into more details, but I just want to keep it brief. The other thing that I wanted to flag is that there is a green credit scheme which has also come up, and this is brand new. This has just come out, and it is actually a lot more sort of broad in its design, and it's not talking about carbons. It has 8 themes. It is not restricted to, say, energy as a sector. It's not restricted to one entity, but you have water, air pollution, mangroves, so on. There are 8 themes, and they will be collectively labeled as green credits. It is kind of fascinating because how would you basically compare one sort of unit of air pollution reduction with one unit of water reduction? How would you trade off between water and air? So all of that is yet to be developed. There are the basic principles which need to happen. We need to have proper market signals. We need to have benchmarks. There are a lot of frameworks which are existing, which can sort of kick off as a starting point. The government has set up the sort of steering committee and set up the sort of institutional infrastructure. Then it sort of builds with public, like right now it's open for public comments. It's not sort of passed into law. It's just sort of, how do you say, and it's early stages. So I would say watch this space, and perhaps it will evolve in ways which will change depending on the government's own climate priorities. I'm happy to elaborate this later, but that's just my quick opening remarks.
No, that's great. That was quite a comprehensive overview. So just the beginning, along with carbon markets, there's also green credits that's been envisioned, and somewhat a long way to go yet. But yeah, we'll see where it leads to. No, great, Bala. Thank you. I'll go over to you, Anirudh. If you could explain to us what Climbs does, and also in the context of carbon markets, what is the technology that you're bringing in? That would be great to hear.
Sure. Thanks, Juvi. The root problem over here is we don't have enough deployed capital into removing carbon or avoiding carbon today. So fortunately, we have really great solutions in the world to do both, to stop new emissions from going out, and secondly, to remove carbon that's already out there. Right? So those are really the 2 categories we got to look at carbon markets with: avoided emissions and removal of emissions. For both, the solutions exist, but we're not putting enough money fast enough. And that's the root problem why Climbs exist. We said, let's go and find wherever the money in the world is, and then incentivize it to be deployed to become climate capital, and then flow towards these solutions. Let's grow the pie. Not just keep churning the same amount of capital, but grow the pie of capital that's going into carbon removal. And for that reason, Climbs is a climate finance company, but we're really a behavior change company too. As a behavior change company, we build product to incentivize different stakeholders to want to spend more money on climate finance. So we do this with 3 categories. The first category, Climbs started doing this with is individuals like you and me. And we reach individuals through consumer brands in society. So we all keep buying stuff. As human beings, our carbon emissions are prevalent on everything we buy. But unfortunately, as human beings, we will never go down to 0 carbon emissions. It's just impossible. So whatever those residual carbon emissions are, we work with brands to show people their true cost of consumption. It's not just your economic cost and how much you paid for it. It's also your environmental cost of what you're consuming. So we show that through consumer brands to people. If you're flying, if you're booking a bus ride, if you are eating food, if you're buying a t-shirt, you should see your carbon footprint on it. So that's one part of it. And on top of it, we allow people to actually contribute a little bit of money, and then let them decide which sort of climate project in India they should be able to finance and support. So that's one way we've started bringing in a little bit more money into the carbon markets. And today we work with more than 40 brands across flights, food, fashion, personal care. The next side is enterprises. Big companies have net zero carbon goals. We work with them to bring in a different form of capital into the market. And the third big set that we're now going into is really turning carbon itself into an asset class. It's very ambitious, but can we really enable an economic return for people who invest in nature? How cool would that be, right? You can actually come in and invest in a forest or agroforestry project or regenerative agriculture and make an economic return, right? That would unlock so much more money in the world. So the core insight over here for Climbs and other companies like us is our global GDP is actually really, really large. People forget how large the world is and how much money there is. It's about $105 to $112 trillion. That's a lot of money. The amount of money going voluntarily into carbon markets today is $2 billion a year. The compliance markets are about $800 billion a year. Far larger, but still not enough. Cumulatively, we need to bring it up to about $3 to $6 trillion a year if we really want to have a shot in this decade of meeting our net zero goals, at least having a pathway to net zero goals. That's why we need to ramp up the amount of money coming in, and that's why we don't want to just rely on compliance and push-based programs to make that happen. How about making people actually want to do it? So we can build fun product that solves for your core incentives and increase or grow the pie. That's really why Climbs exists. But I can go more into detail perhaps later in the conversation too.
Super. No, very interesting, Anirudh. Consumer behavior change and increasing the pie. Nicely put as well. Thank you. I'll go to you, Prabir, on Trust01. And if you could also tell us what you do, again, in the context of carbon markets. It'd be great. Credits.
Thank you for that question, and thank you for having me here. So we are into, let me tell you something. If you can't measure, you can't manage. So we are into the measurement, and you are also into the management. So we have got three things. Let me focus into two things. We are the one of the company which has launched a product called Footprint under various framework, be it on a ESG framework or BRSR, for the India framework, India very basic framework, or Singapore framework is SGX, or on European framework GRI 2021. We have got almost around 10 framework. We have launched our product, which will help you to analyze how much carbon footprint you are creating. That's the first thing what you are doing. So Footprint is on the market, and this is becoming mandatory for the top listed 1,000 NSE BSE listed company. And we have got a decent clientele out there who have started using this on the BRSR framework. And obviously, this framework is not restricted to BRSR, so it's a kind of an interoperable. You can report in any framework if you are reporting in one. So that's the measurement what you do on the how much is your carbon footprint. And here is something good what you're doing. So generally, ESG framework just give you a kind of a scope 1 and scope 2. We have got a bit enhanced version. We have got a complete scope 3 out here. Why scope 3 out here? We have got a Trust01 chain, what you told initially. Trust01 chain is a complete end-to-end supply chain traceability that also measures the carbon footprint. So we have got scope 1, scope 2, scope 3. Now, in a typical scenario for an organization, scope 3 is generally 78% to 92%. Which goes unreported if you look at the present framework kind of a thing. This tool is helping you to analyze, though the scope 3 is not mandatory on the BRSR framework, but again, it's giving a scope to declare your total carbon footprint from A to Z, 1 to out. That's the first tool. Second tool is that what we create, we have got something called a solution as a DMRV, Digital Measurement Reporting and Verification Tool. This is a kind of a digital platform. Whenever you do certain climate action, as a methane reduction in paddy field, that's eligible for certain set of a carbon credit. Or you take the case of India is producing a lot of biogas, and you capture those biogas and use as a cooking gas. So these are biogas. We also create a lot of carbon credit. In fact, we are working with one of the biggest NGOs in India, Seva, creating around 80,000 Seva 80,000 biogas plants and creating around 500,000 carbon credits, maybe upward into 700,000 carbon credit per year. That's the management side. So in the both the ends, we are there. So three things working in a sync and creating a kind of a repository for you. You can offset your carbon footprint. Also, you can measure your carbon footprint. That's the whole ecosystem we're working with. And yes, we've got multiple clients got onboarded, and that's how we are doing it for last 2 years specifically.
Right. No, super. So you're really giving an end-to-end solution and working on both ends of the spectrum. So great, thanks, Prabir, for that. Shruti, I'll move on to you. You mentioned that you have been investing in green companies. It's been you've done multiple investments in green companies. What are your views when it comes to investing in a company that is involved in the carbon market? They may be on the technology side of the carbon market, making the carbon market better in some way, or they might be a company that's getting carbon credits or selling carbon credits, basically. Do you think that it helps in de-risking your investment portfolio in any way? So how do you view investments, such companies?
See, the carbon market, while nascent, is growing very, very rapidly. It's a multi-trillion-dollar opportunity. More than 1,200 large companies globally have pledged net zero emissions, and everybody agrees that the path to the 1.5 degree, temperature increase target is not going to be achieved in a business as usual manner. We will need to look at significant efforts being made on avoidance as well as removal, and carbon markets give you a way of financing that transition. So carbon credits would be one way of financing. There are additional outcome-based products like your green credits, biodiversity credits, to name a few. We do think this represents a very attractive space. Within the entire value chain, we think the space around measurement is especially attractive. One of the biggest challenges the space has faced in the past is defensible measurement. Everybody's read the now infamous Guardian report that talked about how a lot of credits are actually not defensible today. If you're able to build technology solutions that can create that repeatability and defensibility, it will help standardize the carbon credit as a commodity and give a shot in the arm for the market itself. Because it creates an additional financing source or an additional revenue stream, it allows a lot of newer business models to emerge where companies can look at enhancing impact by padding their cost structures using carbon revenues. That's again something that we're looking at quite actively.
Okay, nice. Okay, thanks for that, Shruti side. I'll move on to you, Bala, because I think of your first, when you were talking about carbon markets, you also said that there was a mention of green credits, right? And moving beyond just the energy, just GHGs, and seeing other things like water impact, air pollution impact, etc. Right? Could you talk a little bit more about this? That apart from carbon credits, what are the other, have there been existing green credits that exist in the market today? What do you see the future like in these kind of credits? Because there are many startup founders here who are interested, working in these technologies, who are really interested to know more about this.
Cool. And actually, there was a question from the audience as well. I'm happy to answer that as well on who issues these certificates. Yeah, so good question, and sort of really fascinating to look at the market evolving from just being carbon. It's sort of in some, I'm putting my policy hat on. In some sense, it reflects the trend of global climate diplomacy discussions as well. We used to talk all about mitigation, and sort of cutting down carbon is exactly tied to this mitigation process. But more and more focus has been, especially in the last COP, the establishment of loss and damage fund and so on has been towards adaptation, building resilience, and so on. And these are also very important elements broadly when we are trying to combat climate change. So in that sense, this the sort of green credits draft document, or like just the document the government has circulated, is interesting. I mean, I have the document with me, but it has like tree plantation, water-based waste management, eco-mark, and sustainable buildings, and so on. The sort of honest answer is this is new. I don't think there is a sort of a clear example of another sort of scheme somewhere which uses such a broad sort of coverage to track to issue credits, and of course sort of the associated market mechanisms. And this is basically comes back to the question of fungibility, which I had mentioned, like how would you trade one for the other, and that's something that we developed. But on the positive side, it is new, and like if this is done right, then it can potentially create a new mechanism through which more it's not just tied to like one of those few carbon projects, but there is a lot of sort of other avenues through which things can open up. There was a question from one of the audience members asking, we, I believe, make single-use plastic to bricks, and how do you issue carbon credits to that? This is kind of difficult to track from the carbon specific perspective. I'm just using the example from the audience here. So like, for example, plastic is made from petroleum, and petroleum is going to have an associated carbon footprint and so on and so forth. However, if the lens that, for example, this green credit scheme has put out is that there is an option called waste. So waste reduction and associated. So it definitely opens avenues for sort of more creative and more sensible solutions. And this is basically tying into the principles of circular economy and, of course, mission life that the government has been promoting as a part of its overall climate agenda. So yeah, I mean, that's the best I have. Unfortunately, I can't say like, okay, how it's going to evolve. And just finally, on who is going to be issuing these certificates, I went through the document, and my understanding it's going to be the Bureau of Energy Efficiency for the carbon the carbon emission reduction certificates, but it's not sort of established yet. This is my understanding, and I'm happy to share the link that I'm referring to here. Thank you. Oh, back to you, Julie.
Yeah, great. No, thanks, Bala. And hope that the entire green credits scheme actually comes into, gets operationalized in some way, because I think everybody's waiting for this to go beyond just the mitigation to other KPIs as well. Great. So this is a question for both Anirudh and Prabir. Probably Anirudh, you can take it first, and then Prabir, you can add on to it. Carbon markets traditionally, I mean, they've been around for a while, and we know that there have been challenges to the carbon markets, right? There have been challenges around monitoring, transparency, etc. How do you view these challenges, and what kind of technology do you bring in to kind of combat this to make carbon markets better? Anirudh, if you can go first, and Prabir can add on.
So to start with, I think it's a very, very good thing that there is so much criticism, because it actually allows the entire system to get healthier. And it's a stress test, consistent stress test toward becoming more healthy. So end goal is we need carbon sinks everywhere. And we need legitimate carbon sinks that are additional, which means they were not going to be there, but they've now been created and are adding to more carbon removal. And they're permanent. They're not just started off and then disappeared 3 months later, right? They continue to be here long-term, because long-term sustenance of carbon sinks is extremely important to actually keeping that carbon trapped away forever. So I think carbon markets have been around for the last, 15 years or so. And they've gone through a lot of dodgy deals and dodgy projects and double counting and everything in between. But because those have happened, we've learned like what not to do. And in fact, any incentive system in the world, in economic history of the world, has gone through stress test till it's become better. So now in 2023, we're at a place where we're actually talking about what is a good quality project versus what's a bad quality project, right? And then within that question itself, there are companies who are just building companies, like deep companies on that problem, right? So one part of it is like MRV, measurement, reporting, verification systems. 3 years ago versus now, like it's a completely different world we live in, so much depth, and not just generic carbon credits. Within each use case of carbon credit generation, there are MRV companies. So you can take agroforestry and you will find like really, really cool companies going all the way down using geospatial imagery as well as on the ground like soil testing, you know. Similarly for biochar, similarly for forestry, similarly for mangroves. So MRV systems, I think, have to become more robust, and they already are compared to a year ago, right? So the scale of improvement of like having those, you know, indisputable audit checks is getting far better. The second part of it, I think, is incentives have to be far better defined. So carbon credits are really just an incentive tool. They're an economic instrument to make sure everybody along the value chain is aligned and wants to do this, right? So how do we distribute those better? And I think the distribution systems of carbon credit are also getting better, where there's more, you know, equal sharing. If part of that carbon credit does not reach the end, the last mile person who's a stakeholder maintaining that regen ag farm, he or she will not want to maintain it 3 years later, right? So economic distribution models in itself are getting better. Then another one is like risk, you know, climate risk in itself is becoming such a cool field where people are measuring, hey, what is the climate risk to this particular area? And that informs the thinking of a financier who's coming in and saying, okay, here's $10 million to build a new carbon sink. So I think there are individual pieces of it that stack up like a Lego block. And it's really, really exciting to have that, because we know for a fact, like, we don't want to build all of it. And I don't think anybody else out there also wants to build all of it. What we want to do is go deep in what we do best and plug in with the right partners, so that, you know, the stack of it, the combined stack of it actually creates a really, really resilient, healthy, still imperfect, but like getting better carbon finance system.
I think Anirudh covered a very vital aspect, MRV. So we do the digital MRV, DMRV. We do a couple of the methodology like the methane reduction in the paddy field, biogas project. We have done the DMRV. In fact, the first set of carbon credit we are expecting from DMRV in next 2 months' time from the paddy field. The other aspect is what is need to be digitization. You know, we have got a beautiful technology as a Web3 technology. Blockchain is a beautiful technology. Integrating blockchain. Somebody asked me the question that whether we can get a 1 kg carbon. Yes, it's possible. Right now, 1 carbon credit is not 1 kg, it's 1,000 kgs of carbon dioxide sequestration or avoidance. You can do it fractionalized. Think it of a situation when you drink a bottle of Pepsi or a Coke and you know that there is a carbon footprint of 10 kgs. You can sequester that, you can scan the QR and do that. That's the technology availability is there. That's what we are working on. We're working on the blockchain technology. We are giving you, let's say you identify there are 100,000 tons of carbon sequestration. Can you trace it? Yes, there is a possibility of trace it. Our technology helps that everything get digitized, get captured at the source, and get hashtagged and put into the blockchain. We are working with multiple blockchain entities to do that. There are multiple exchanges are opened up in the Web3 parallels. Talk about in Japan or in Singapore. Right now, Singapore token 2049 is going on. You can find that there are a lot of buzz around that. This is the digitization aspect what you are looking for, and this is that how it is going to create the things. Let's take the use of the betterment of the good technology as such as Web3. I'm not talking of the crypto, not a supporter of crypto, but again, that technology is going to provide with the complete transparency, traceability, and the complete trust in the ecosystem. That's how the things are going to get evolved. Let me tell you the last point. Talk about the traditional carbon credit with a serial number and talk about the digital carbon credit on the blockchain enabled. You are going to get a price difference as a premium product. That's what we are looking for. We have looked into the same system of biogas project or the biogas carbon credit in Gujarat, where they are getting around $10. When we are getting into digitization, we are getting 100% improvement out there. So this is that thing what we are working with a couple of the blockchain company. Digitization, decarbonization, and digitization, decentralization, and decarbonization are the 3 Ds which are important for now. And that's how the market is going to get evolved. Thank you.
No, thank you so much, Anirudh and Prabir. Very exciting times, to look at technological advancement in the carbon credits market. I'll come to you, Shruti, and you have been investing, as you said, in the green companies. What is your overall view of the carbon market? Like, do you find it risky and uncertain as they're subject to some price volatility? There'll be policy changes. It depends on the market demand, etc. So, do you view that as risky? And can you share some experience of investing in companies who have are technology companies on the carbon market?
Sure. So the markets are volatile, and that's largely a function of supply-demand, differences that happen in all open markets, regular capital markets included. As the market scales, we will see a little more predictability and a little less volatility in the space. Right now, there is a lot of speculative activity that will happen as well. That does not take away from the value that the carbon markets will bring to the climate space and their ability to channel, capital into projects that will help with avoidance as well as removal. In fact, the secondary carbon market is going to make this asset a lot more attractive and mainstreamed because liquidity of the asset and the value you hold has been responsible for helping other markets take off in the past. To your point on policy changes, if we look at the Indian landscape and also at the global landscape, policy is supportive towards channeling finance for climate projects. Policy is a little mistrustful of speculative behavior in these markets. And that's not necessarily a bad thing. So if I go back to a decade ago and look at newer financial asset classes that got created, regulation and supportive policy mainstreamed the sector. At the time, when regulation came into the microfinance industry, initially there was a lot of hue and cry, and everybody thought that the sector would probably not be able to survive all of the different regulatory oversight that was put in. But what it ended up doing was making the sector mainstream, and look at how attractive it is as an asset class. So policy is actually going to be an enabler for carbon markets here.
No, super. Great. There are a lot of questions that have been asked by the audience. So I'm just going to take this time to address a few that have not been. So thanks all of you all for answering questions as well on the side. Some of the questions have been answered. If you still think that your question has not been answered and you would like somebody else's perspective on it, please again put it in the questions tab and I will take it up. But one question by Himanka for you, Bala, that Vera has issued plastic credits recently, and do you have a take on that? We'll start with that.
I think someone else is perhaps better. I am not on top of like the Vera standards. I think Anirudh and both Prabir responded to that in another question, I believe.
Let me take on that. In Indian parlance, there is something called as the PIBO, producer, importer, brand owners. If you are falling under these 4 categories, they have to mandatorily, there's a rule that you should recycle up to 75% under various categories. And this is under your they call it extended producer liabilities. You have to fill this. So how this works, if you are a recycler, then you can create certain certificate. Let's say you create 1 million ton recycling. So this certificate should be bought by those PIBO category. They will pay you, and it's a kind of a mechanism is already placed. It's if you visit to the Ministry of Environment website, there's a category. They will issue the certificate and they will compensate. So this is a complete ecosystem is already there. Even there's a question specific. Vera has issued. Yes, Vera is issuing the plastic credit, but again, you have to look into that Indian parallels. Quick monetization is possible, and it's a good way. People are doing that. Even we have developed certain platform to give you the complete end-to-end traceability of the complete plastic value chain on the recycling process and how you create that total connectedness and showcase, prove that yes, this is the plastic credit and there is a good demand. And going forward, I've gone through the recent policy. It can go up to 95% of the, in certain cases, the PIBO category, the producer, importer, and brand owner, they have to buy the plastic. You can't import into the plastic, I think, going down beyond 2030 to this country. So that's a possibility. Thank you. I think I hope answered you.
Yeah, I think so. Great. Thank you, Kabir. Shruti, there's a question from Deepa that talks about the price point required for conducting LCAs. So if a startup wants to voluntarily report or do their LCAs, they get a price point of minimum 5 to 6 lakhs for their baseline audits. And then the investors are not keen on allocating such a budget at early or growth stages. So when should startups start looking at carbon management from an investor perspective?
Right. So sustainability needs to be integrated into business strategy because it's a very critical risk mitigation. The way to think about this would be to look at, what's the ROI on the audit that is being done? Is the audit at this point in the life cycle gonna help attract a different category of capital, lower cost capital? Because see, people make economic decisions at the end of the day, and so that's one arithmetic to look at. The other thing worth exploring is there are new tools that are available that can help you look at doing your baselining without having to spend 5 to 6 lakhs or without having to spend on expensive consultants. So those tools are worth exploring as well. The idea, and we've been looking at quite a few tools in the space built for specific sectors and specific use cases because it helps democratize access to carbon audit and carbon assessment. And only when you measure can you take steps on how to decarbonize.
Right. Yeah, and it is true that there are tools available for basic calculation of impact. Great. I'm going to take this question by Dwarpan. I'm sorry if I'm not pronouncing this correctly. But for Bala or anybody else who wants to also come in on this, when do you think Article 6.4 of the Paris Agreement will operationalize? I think that's a question everybody globally has been asking. So I think quite a pertinent question here. And how do you think India is placed in this respect?
It's a difficult question to answer. Rather, G20 might have given you certain guidance.
Yeah.
Yeah, no, I mean, it's just been like one of those things which has just not really been solved, and it's been dragging on. And given how many years it's been, like what Paris was in 2015, so you're into 8 years of it. I mean, like to take an optimist to estimate it happening soon, I would say. And like these global discussions are getting even more sort of constrained. The green sort of like, what is the $100 billion pledge, the climate fund, that not the promises for that has not been met, and there's already talks of sort of, it's just been like one of those issues which is just not there. And now the loss and damage fund and developed countries fighting for it. It just seems like a long process, and I don't think I can sort of say respond to how it is. India has sort of positioned itself as a strong leader in certain aspects of sort of the overall climate discussions in terms of like through International Solar Alliance and promoting renewables, and sort of the statement right now on tripling renewable energy investments or capacity investments as in G20 and so on. So it's only certain domains, but not particularly related to this 6.4. Perhaps others can have a better response on that.
I think you pretty much covered it, unless anybody wants to add on anything to it. Okay, so moving on, there are a couple of questions which are very specific to particular startups. So I'm just going to kind of go on Rashmi's question, which I don't know whether I understand it quite correctly, but what is the credibility of non-linear carbon credit projects? Projects that offer credits based on a product or service that takes out certain amount of CO2 from atmosphere, as opposed to the existing business as usual product or service. I don't quite understand it, Rashmi. So if you can be a bit more clearer, or probably just type out your question again. Do you mean that, do you mean like carbon removal projects? Are you talking about that? If you could just explain it further, it'll be easier to talk about it. There is a question on EPR credits. Do you see a risk of double counting, that is selling credits for EPR obligation and then again as green credits?
Yeah.
Yeah.
Just through a double counting, you can't do that. At least you should get one benefit. You can't do both the benefits.
Yes, so there is a risk of double counting basically, and ideally you shouldn't do that. All right. There
Sorry,
sorry, yeah,
so
go on.
just wanted to add to that point on the risk of double counting. It's one of those things which are fascinatingly open-ended with this green credit scheme, where they say that it can also be, you can also generate carbon credits from the same products. So I'm guessing it's intended to be markets running in parallel, and I responded to a question from the audience on that. But I mean, it was like, so if you're setting up a renewable plant, you can potentially have renewable certificates, carbon credits, and green credits, which is triple counting. So I mean, these are all the sort of issues that needs to be sort of fixed going ahead. Need to pick a lane at some point.
Right. Right. All right. Question again. There's a startup that works on last mile delivery space using EV. Are they eligible for carbon credits, and how do they acquire it?
I can take that one. So this would fall under the avoided carbon emissions bucket. I mentioned avoided and removal.
Yeah.
Avoided also has a market. It's just like in the far lower priced segment of the market, $1 to $3 typically if it's generated and it's legit. Talk to Fair Climate Fund. They're out there. They actually help generate credit, and they are the ones who did it for Blue Smart as well. So
yeah.
Yeah.
Super. And there is a question from Deepa again. If a company is looking to claim credits, they need to audit themselves first. But apart from there, is there a pathway given our Indian platforms? Again, not quite sure about this question. So Deepa, if you just want to kind of rephrase it and put it, that'll be great. There's a question from Prasanna, which talks about tokenization of carbon credits and future of blockchain on carbon credits. Prabir, you spoke about this, and Anirudh, if you want to add in.
I can go second.
Okay. Yeah, there is a good potential. In fact, a couple of tokenization opportunities are available. But again, you see this blockchain, what was assumed to be or what was thought it of, it has not taken up that way because of obviously there are certain other speculative reasons. But again, the future is going to be pretty big. The moment you say tokenization, the good thing is that fractionalization is possible. The simple way, one carbon credit is 1,000 tons of carbon dioxide, 1,000 kgs of carbon dioxide removal or sequestration. As an individual, let's say I want to offset my monthly carbon footprint, I can do that. In fact, in a couple of the initiatives, the Middle East, Southeast Asia, things are going to get into that parallel. So as a small SME, if I'm creating around 1,000 carbon credit, can I 1,000 carbon footprint, can I remove that? Yes, that's possible. 1,000 kgs, 900 kgs, all these things. And tokenization is going to give you the complete ecosystem for that. And the second thing is that yes, tokenization is going to help you democratization. Tokenization is going to help you to populate this thing, and it will make a kind of a carbon is a kind of a carbon awareness or a carbon consciousness. It's a carbon is a business between you and me. So we can think it of that. So that's going to emerge, but again, when you have to wait and watch.
Right. Anirudh, you want to add on?
Yeah. So I think we start with having to unlearn everything we've learned from the last 3 years about tokens, but we keep the blockchain stuff. So I think that's important. So like there's blockchains and then there's tokens on top. Blockchain part, I think we've really moved ahead as a species. And it just enables more transparency and traceability because everybody can see stuff and verify it. I think that is an essential piece for the carbon market for sure. Because everything we are doing should be visible for all, right? That's kind of what the registries today are. If you look at a Vera or a gold standard, they are a registry for everybody to go and see what is happening. But can we do that not just for gated registries? Can we have that globally visible for all credits, right? That would be really cool. So I believe that there is a future where every carbon credit operator or player is linked to some form of a blockchain. And then I think we add the second part, which is the actual tokens. And tokens are really just incentive mediums, right? It's a way to move incentive around from one to the other. But the token should be there when there's an end buyer who values it highly, right? Like that's the only way to have economic utility. So I think you mentioned it, Jui, that there are like 1,200, or Shruti mentioned it, that 1,200 enterprises that have already set a net zero carbon goal. And there'll be so many more. Those are the end buyers, right? Like they want to get it, retire it in their balance sheet, or sell it to somebody else. So because of that, there is an opportunity for carbon credits to be turned into a token and then moved around and then distributed for people to make money along the way so that carbon sinks are preserved. I don't think we have to wait for that future necessarily. Like I really like Mr. Prabir's point about the fact that, fractionalize it. Like we've kind of done that with clients. We've actually created a non-token token. So as a Web2 company, each claim is a kilogram of carbon you can utilize. And you can actually just buy it on different online checkouts today and then use it to neutralize. There's just a future where we have to go on chain and then turn it into an actual token so that more people can be rewarded. I think it's an evolution of the entire system. It's not the starting point.
Super. Okay, there are more and more questions on the chat. But we are running out of time completely. So, Anirudh from Deepa, there's a question for you. And for you, Shruti, there's also a question which says that what you feel is the pulse of investors in new tech-based projects like DAC. Do you want to quickly answer that, or would you answer it on chat?
I think it might just be efficient to answer on chat since we are nearing the end of our time.
So if you could just take some time to answer some of the
Sure.
questions, that will be great. For others who we couldn't answer questions, I think I took up most of the questions on the chat, but if a question remained unanswered, please write to us and we'll try to get it answered from the panelists, if that's possible. We are at time, but thank you so much for such a lovely discussion from diverse perspectives. We can see, I think we can effectively say that there is a need for the carbon market to be effective. Everybody is waiting for a more robust mechanism to make carbon markets really efficient to help move towards net zero goal or a 1.5 goal, 1.5 degree goal. With the Indian market, it is still in the nascent stage and we're still waiting to see what path it takes. Similarly with green credits, quite an initial early stages of development, but really everybody will benefit from this and everybody's waiting for this. With this, we would like to wrap up, but our Climate Startup Week is still ongoing. We have many more sessions and particularly another session on carbon credits by King. So please do check it out. There'll be links to that on the chat as well. So do check out our other sessions and our other programs at Climate Collective. Thank you so much for being such an engaged audience and coming up with so many questions. And please write to us if you have any more questions or you want to collaborate on anything, etc. Again, thank you to all the panelists for such a great discussion. Thank you.
Pleasure being here.
Thank you.
Thank you.
Should we
I'll
leave?
close it.
Yeah.
Oh, yeah.
Yeah.
Still recording.
Mm.